Yes, bank slumps 8% in today's trading session. This after a large block deal where nearly 3% equity changed hands. Sources say a private equity investor was a seller in these block deals.
Aptus Value Housing also sees a cut of close to around 7% after 13% equity worth around 2,000 crores changed hands in a block deal. That explains why the stock is a little bit lower.
Yet another day, yet another block deal. We have Zinka Logistics, over 9% equity changed hands worth nearly 700 crore rupees. The stock has come off lows and now trading with gains.
Ola Electric is trading with cuts of close to around 6% after a large trade of close to around 3% of equity changes hands. Sources tell CNBC-TV18 that Hyundai was the likely seller.
Go Fashion rallies as Motilal Oswal initiates coverage with a target price of 1127 rupees a share, citing significant potential for the growth of the business.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. And as you can see, the Nifty is not moved. Actually, it moved quite a bit. It was down close to around 100 points. Then it was up close to under 50 points. But as we speak, there's virtually no movement on the Nifty. Now up close to around 15 points, as you can see. But I think the broader markets, that was doing a little bit better, continues to see some green, Mangalam.
Yes, if you looked at, this, you would mistake that for the pitch in Ahmedabad today for the IPL final. It's absolutely flat. Will it be a belter or not? Or will there be some spice as it was in the first hour of trade? Who are you betting for?
Who are you going with?
Because Mumbai is out now, I don't have a dog in the fight, but I would want Virat Kohli to win it. Though, a lot of people would want Shreyas Iyer for his great form to win it as well. So it's the first time I'm going absolutely 50-50. Whoever chases wins. And the best part is between PBKS and RCB, whoever wins, they win it for the first time.
Or do you think Preeti Zinta's dimple swings it in Shreyas's? Huh?
Well, I don't know, man. I track United Spirits, so maybe FMCG's life would take me to RCB. Is it what? Preeti Zinta versus Anushka Sharma?
I mean, I think I'll go with Virat today as well. I have to be that because
let's go for Virat.
He's worked hard, he's toiled. So we're going with the old warrior. But kudos to Shreyas the way he's led the team. So no skin in the game, Mangalam, in this one. So either way, we hope the better man wins. Would have loved Mumbai Indians to win, but so be it.
So be it. Let's talk about that. But what's doing well today are the number of stocks which are advancing versus the stocks which are declining. So that win is going to the advances. The green line is winning over the red one. As you can see, nearly 2 stocks in the green for 1 in the red. But let's get you some ideas for profit. We do have one coming in from our colleagues at Money Control Pro. And today, Anubhav Sahu joins in with a stock. Anubhav.
Thanks. So we are talking about Galaxy Surfactants, which has been facing multiple challenges ranging from supply side hurdles to domestic demand moderation. On account of that, near-term growth guidance is uninspiring for the company. That said, we believe post 30% correction from its September 24 high, stock is pricing a lot of pessimism. Now, the domestic market, which makes up nearly 40% of revenue, continues to be sluggish. Sharp pickup in the prices of key ingredient fatty alcohols have impacted the demand. Other key challenge for the company is the price differential between surfactants based on fatty alcohol and those based on crude oil. Now, company is witnessing new reformulations happening at the client end to take advantage of the price difference. Now, while this creates an operational challenge, our company can offer products through alternate routes. For the sequentially, domestic sales volumes are stabilizing, and expectation for normal monsoon and supportive fiscal and monetary policy may revive domestic consumption. Also, bulk of the supply side issues for other geographies have subsided, and the US business remains a bright spot in spite of incremental trade tariff uncertainty. And lastly, EBITDA per ton guidance is intact, and valuations are reasonable at 12 times EV by EBITDA for fiscal year 27. Now, given strong defensive profile and steady free cash flows, we believe it is an accumulate candidate.
All right, with that, let's welcome Jay Thakkar of ICICI Securities for a quick technical check in the market. Jay, it's absolutely flat right now, though been consolidating in a bit of a range. Is the positive bias still intact, and what individual stocks would you recommend?
Morning to you, Mangalam and Nigel. Absolutely, I mean, the Nifty has been trading within this band of 25,000 to 24,400, Mangalam. But then, Bank Nifty has been trading with a positive bias. is able to hold out to its levels of 55,500 on a closing basis, that is the level I was watching out for. There is a small hurdle, I would say, that at 56,000. I mean, we really need to see that if Bank Nifty manages to close above 56,000 levels for again second consecutive day, if that happens, then the probability of an upside increases. The Nifty PSU banks have been really doing good, and indicating that the probability of an upward breakout is quite likely. So I'm bullish on the Bank Nifty. I think the overall trend still remains positive. On the Nifty, if it manages to take off 25,000, yes, then it would confirm the upward breakout. As far as stock specific ideas are concerned, then Mangalam, I have a buy recommendation on Hindustan Zinc. It's trading around the levels of 467 right now. We're expecting a good short covering out there. We can expect the levels of 490 to 500 in this series. On the lower side, 450 would now act as a very crucial support. It has provided a breakout from a nice base formation, as well as coupled with the short covering as well. So this is one idea which I think is quite favorable for the bulls in the near term. And second would be Punjab National Bank. I had recommended Bank of India earlier. Mangalam did well, and now it's Punjab National Bank is trading around the levels of 109.5. I think 105 is a very crucial support now in the short term. It has given a good breakout. Last 2 days momentum has been quite positive. It's likely to inch towards the levels of 118 in the near term. So if you see the risk reward, it's also quite in favor of the bulls.
Okay, all right. Thanks a lot, Jeff, for joining in and, in fact, giving us those picks. We let you go today without a dance step, but on Fridays, not excused at all. Thanks a lot for giving us a view on markets as well as individual stocks. Slip into a short break. On the other side, we have a special conversation lined up with the managements of Lumax Auto. Stay with us.
Welcome back. Let's get chatting with the management of Lumax Auto. A good reported set of numbers that came in on a consolidated basis. Their revenues increased by 50%. The net profit increased by 55%. The stock doing fairly well in today's trading session as well. And that's exactly what the street was anticipating as well. A good performance. But more importantly, a strong outlook for FY26. We're joined by Anmol Jain, who's the MD of Lumax Auto Tech, to discuss the quarter that passed by, but more importantly, the next year. Thanks a lot, Anmol, for joining in. Let's start with the outlook for 26 itself. What are you penciling in when it comes to revenue as well as margin expansion? And more importantly, I'd like your thoughts on two things. One, content per vehicle. And secondly, the acquisition that you had made, right? You said that it could be about 600 to 650 crore worth revenue in FY26. Are you on track for that?
So thank you very much. Yes, FY25 was a good year. Before I get into the FY26 outlook, I think it's important to understand we just kickstarted a midterm plan up until FY31. And one of the factors is that we continue to aspire to grow at a minimum 20% CAGR year on year going forward. So for FY26, our outlook is pretty similar. It's probably a 20 to 25% top line growth. Backed by a strong order book, backed by new launches, backed by increased wallet share, also backed by a full year realization of certain new initiatives which were taken, be it the green fuel acquisition or certain other SOPs which we went into FY25. In terms of margin, I think the company has done fairly well in FY25. We do expect maybe another 80 to 100 bips margin expansion in FY26. This is again in continuation of our vision to attain a 20% EBITDA margin in the future. It's not time sensitive, but hopefully in the next 7-8 years, we should be able to get to that milestone as well.
All right. Hi, Anmol. Good morning and good to see you. When the acquisition, Green Fuel, I think earlier you were talking about around 350 crores in the coming year. What kind of contribution will it give? And that one's already doing higher margins, right? I think it's already margins already around 20%. So that helps the entire trajectory. So tell us about this. How do you see this business scaling up FY26, FY28? And also, as Mangalam asked, content per vehicle, what is it at? If you're going to be moving to a blended 20% margin, this as well has to go up, right? So tell us.
So absolutely, we are very bullish on the CNG outlook for the passenger car industry going forward. And again, that was one of the reasons why we strategically went into green fuel. I think for FY26 per se, on a full year consolidated basis, green fuel should be upwards of 300 odd crores. That's the sense I'm getting. The CNG models are still doing well across OEMs. But if I were to give you a more 5 to 6 year horizon, I think this company has the potential to even come to close to 800 to 1,000 crore top line. And that's the kind of growth, that's the kind of penetration of CNG, which we are eyeing over the next 6 years. So clearly, it will contribute a lot more to the overall pie by FY 3031. I would not be surprised that 10% of the consolidated revenues comes from green fuel alone over the next 5 to 6 years.
Content per vehicle?
So content per vehicle, let us say, if I were to talk about Lumax Auto Technologies as a whole, we are currently at about 35,000. The addressable content per vehicle could be up to almost doubling that to almost 70,000. One would be the CNG. Certain products where we are not on the CNG delivery system today. We are not on the tanks, for example. And again, that's something strategically we may evaluate going forward as the regulations change and the Type 4 tanks come into play. Also, there is a lot of focus on the SDV, software-defined vehicles. So we've actually kickstarted a new vertical within Lumax Auto Technologies, which will try to integrate all the different components and hardware which we sell to the customer to make us a system integrator, a tier 0.5 of sorts going forward, thereby again increasing the value content per vehicle.
Interesting that you've upped this guidance to about 800 to 1,000 crores in the next 6 to 7 years. I remember you saying this could be about a 600, 650 crore business over the next 4 or 5 years. So that's an interesting one. But, just a point on your overall, if you look at the organic versus inorganic sort of revenue, you said that in your North Star, 20% CAGR comprises of 15% organic and 5% inorganic. You've made one acquisition. What are the other areas where you're eyeing any opportunities? And can we hear of anything in the next couple of years?
We're always evaluating opportunities. Currently also as we speak, the company is evaluating 1 or 2 opportunities. I don't think we will probably hear anything in FY26. We like to get in, stabilize things. That's exactly how we went into IAC in 2023, stabilized in 25. We just picked up the rest 25%, went into green fuel in 25 as well. So I think not for FY26, but we definitely are looking at few themes. It could be related to exports. It could be related to lightweighting. These are certain trends which we feel could be areas where we would evaluate the next inorganic move in. But again, it's too premature and soon for me to say or comment on it.
Right.
I think FY28, by FY28, we should have something in our kitty in terms of the next inorganic move.
And what's the war chest that you've assigned to this? Because you do have some debt on your books. You have about 220 crore worth capex plans as well. So what's the room for any sort of acquisition? How does your balance sheet digest it?
So first and foremost, I think the filters are that in any inorganic move we make, should be margin accretive. These are not turnaround businesses. We saw it with IAC. We also saw it with green fuel. These are margin accretive business for the consolidated entity. They operate already at a higher EBITDA margin than the consolidated numbers. In terms of the free cash, let's say the company is already sitting on more than 300 crores of free cash. Also with the integration of IAC and hopefully going forward once, post-regulatory approvals, the entity is merged into the Lumax Auto Technologies standalone. We will also have a double down on the free cash. We will be able to utilize the balance sheet, leverage the balance sheets in a much more aggressive manner by utilizing IAC's free cash in the next inorganic moves. So that's the strategic plan. How do we move forward on inorganically?
And just help me understand this with regard to IAC, since you mentioned it a couple of times. You had 75%, you're buying the remaining 25% and then merging the entity, right? What is the agreement then with the parent in the United States? Do you have to pay any kind of royalty, any kind of technical fees?
So number one, the engineering capabilities on design, future technologies, we have that 100% in-house. We have a R&D center with more than 350 engineers sitting out of Pune, and we've made an offshoot in the north as well recently. So we are a full service provider of end-to-end solutions of interiors. The parent company still would continue to have a technical agreement and give, let's say, the cutting edge technologies. These would be more, Nigel, on sustainable materials. I think we're still at the tip of the iceberg when it comes to sustainable materials usage in the interiors, whereas North America is really leading the pack, in other countries like Europe as well. So those kind of cutting edge technologies we will have access to through a technology license agreement. But to meet the Indian consumers and Indian OEMs demands, and let's say, kind of evaluating what are the future trends in countries like China, which I personally feel is years ahead in terms of the HMI interface and the whole interior cockpit and cabin feel. So we would be getting a lot of these technologies now from China as well.
Okay.
Certain TAs and, but yeah, the parent IAC continues to support technically going forward.
Royalty will pay? Technical fees will you pay?
As of now, there is no such discussion, but as and when we do lend some technical support, we will discuss those at that point of time.
Okay.
Do you have any conscious thoughts on our aftermarket? How does that do for your margins? Because as a proportion of your sales, it's come down versus last year, obviously because of other factors as well, but at around 10%. Is there a strategy here?
So absolutely. I've always been very bullish on the aftermarket. The reason why you see a dip in the percentage contribution is because other businesses have fared.
Exactly.
I think aftermarket by itself grew about 5% last year. This year we have a pretty aggressive plan, and more than a plan, I think the whole thought process and strategy has shifted in the aftermarket to focus more on the demand generation. So there is a lot of work which has gone in, planning the entire length and breadth of the country, which district we have to have increased presence, backed by a strong product development. So I personally feel this year we should look at a healthy double-digit aftermarket growth. The early signs of Q1 already suggest, April month was a good month for the aftermarket for us already. So I'm pretty confident that this year we should look at a healthy growth in aftermarket, and it will come back on track to, again, provide a better consolidated margin, because as you rightly said, aftermarket does operate at a higher margin than some of the other OEMs businesses we have.
All right, Anmol, thanks a lot for joining in and giving us your outlook for FY26 and beyond. We wish you good luck. Hope for you to achieve all of them, and then we come back and discuss all of this with us as well. Just keep an eye on the market, though, as we speak. We are seeing the Nifty, which has slipped a tad. When we started the show, it was absolutely flat. Now it's down almost 60, 65 points. Nothing really to worry, but just keeping an eye out on what is it that has taken the market lower. Just watch out for a couple of these FMCG names. HUL has moved to the low point of trade. We're seeing some of the banks as well move lower. So we have IndusInd Bank, which is lower. And then we are seeing some of these PSUs, which were doing well yesterday. NTPC, for one, has moved to the low point of trade.
Mangalam, just one more point. Some of these fertilizer companies and fertilizer-related names, NFL, RCF, I don't know what's going on there. But these stocks suddenly have just taken off in the last few minutes. I think we should get the intraday chart out there. They have moved to the high point of the day. So I'm not sure whether there is some news flow, but there's a big volume spurt that we're seeing on these names. So just thought, we'll highlight that. Even Fact actually should come up here. Fact as well has suddenly burst into the limelight. That's moved to the high point of the day. So maybe some news flow on these names. Suddenly spiking as we speak. One more stock that's moved up is PCBL. That's now at the high point of the day. And Indico Remedies as well, quite strong as we speak, Mangalam. Yeah.
Yep, so we have a bunch of stocks doing well, and to add to that list, we have Brain-Based Solutions as well. Remember, they reported a weak set of numbers, and the stock is well below its issue price as well. But today, from lows, it's seen a big move. In fact, it's about 50% away from its 52-week high, and from there, it's seen some purchase currently at the high point. We'll take a short break, come back, get you more on the stocks and individual, news stories, perhaps something on the fuel prices as well on the other side of this break.
Well, let's focus on fuel prices then. Sources tell CNBC-TV18 that the government is mulling over a decision to slash petrol as well as diesel prices. Sapna joins us to fill us in with the latest on that front. Sapna?
Well, what we are getting to hear from sources and including the industry, basically, some of the oil cores, is that probably the ongoing geopolitical uncertainty is weighing very heavily on any kind of a call to reduce fuel prices. If you recall the recent statements made by the US administration, or rather, their Senate members, in terms of imposition of a 500% tariff on those countries which are importing oil from Russia, basically India and China primarily, that's what I've named. So that these kind of statements that are coming are weighing very heavily. So there is a lot of geopolitical uncertainty, so to speak, and these kind of statements need to be examined. They need a closer look. So for OMCs to take a decision in terms of reduction of prices, today you cut by, say, for example, 2 rupees, and tomorrow there's a different kind of a scenario, in the international markets. So, there is much to unpack, and hence I think the government and the OMCs primarily, they are in a wait and watch mode. The other aspect also is that assuming, there is a 500% tariff imposition, or there are, additional tariffs being imposed. Well, we also need to keep in mind that there is enough oil supply in the world today. OPEC has been increasing its production, and 1.2 million barrels per day have been coming in, and this cycle is on currently. So it's not that there'll be a major problem in terms of sourcing of oil, except that the kind of discount that we're enjoying currently, they may not be available. So putting all of this together, government OMC is of course in a wait and watch mode, and we'll have to see how the situation unfolds. Till then, probably the fuel price reduction, that relief that we're talking about, may not, kind of unfold immediately. One last point I would just like to add, even if you look at the currency markets recently, so the US dollar has been weakening, but the surprising part is that the Indian currency is also weakening. So in the last three odd weeks, that has been also a parallel development. So these are all factors which are creating a bit of an uncertainty. I think government and OMCs primarily, they would like to be very sure before they take these kind of calls, because once you reduce prices, you can't go around increasing them again in a jiffy. Given the fact also that, the prices
Right.
are, kind of administered, so to speak, at the moment, since the Ukraine crisis started, since the Ukraine conflict started.
Take that point, Sapna. Thanks a lot for that. So that's about all the things around fuel prices. Just keep an eye out on a few other names as well from the broader markets which are doing well, even though the frontline indices are slightly lower right now. Look at Dodla Dairy. That stock is up nearly 6%. In fact, it's now turned positive for this year. Remember, the management had joined us post their fourth quarter numbers and said that they have taken a price hike of 1 to 2 rupees per litre. So going forward, margins would be supportive. Add to that, their animal feed business would do well for them as well. And they do aspire to have 25% revenue each coming in from Maharashtra, Tamil Nadu, Karnataka and Andhra, versus more of their revenue coming in from Karnataka, Andhra and Tamil Nadu right now. So all these factors doing well for Dodla Dairy. And typically, dairy stocks move in tandem. So let's pull up something like a Parag Milk as well, which too is holding up with 2.5% in terms of gains, largely because of perhaps higher milk supply and the price hikes that they've taken already, and margins improving for the entire industry. With that, we'll wrap up on this edition of Chartbusters, but you stay tuned to CNBC TV18 as Trading Hour comes up next.